Live. Good morning to everybody. We are live. Yes, you've caught us in a little bit of a different scenery today if you're used to Behind the Markets in the morning. My name is Munyuma Mutwale. No big old giant headphones on me right now. We are doing a little bit of a change up today. I have my co pilot with me, Stephanie. How are you doing this glorious and wonderful morning? Hello, Stephanie. Okay, it appears we may not have Stephanie this morning at the moment, but thank you to everyone who's with us today. Give us a shout if you are with us today, if you're joining us. Give us a message, tell us where you're joining us from, inform someone, a friend. Who is actually with you today on how you actually can enjoy behind the markets today and recommend it to somebody. Today we'll be going through Finance Friday. I want to really give you the bigger picture today. The big pictures. Yesterday, I was talking about sowing and reaping and mindset. Monday, I really want to go into finance on Tuesday today, just to talk about the seeds of finance and the growth. Remember, we talked about the growth goals that you're looking at in finance. Well, today we're going to be talking about the seeds of it. But first, let's get down to touching into some of the market data in our rundown. In our market rundown today, we will we have seen that the kwacha has continued its loss as it's gone down to 21.4743, down 0.3% as of yesterday, moving up to 1.27%. That's how the dollars moved. 2.37% on the month and 18.66% year to date. We still have a dollar buying spree that's happening at the moment, especially as oil prices globally are going up, as a second war or second conflict has broken up near oil. This is what everyone always worried about. We saw the stock market yesterday move up to a new all-time high, 9,414.37, up 0.63%. As we saw Standard Chartered at Zambeef move up yesterday. Zambeef jumped up by 13% yesterday, up zero, and the old index is up 0.64% yesterday, up 0.75% on the 7 days, up 2.95% 30 days, and 28.3% year to date, making it the best performing of the asset classes so far. We also the bond index up 0.7%, while down 0.18% in dollars, and up zero and interest rates down 0.0064% as of yesterday. So we did also see the rand move up slightly by 1.52%, but the rand's been rotating around this is 1.08 to 110. You can see it's really been rotating amongst that band, up 3.84% year to date, up 1.52% on the month, yesterday, and up 1.04% on the week, down 0.41% on the month. We also have seen that we also see the bond index did spike last week, as we've seen bonds now up 24.84% on the month, year to date, up 0.07%, and up 5% just in this last month. It's been a good month for secondary trading in terms of the bond market. US dollar bonds, unfortunately, are up only 2% on the month, but are down 0.18% and are up 5.51% year to date. While we're also seeing interest rates have actually dropped to below where they were actually at the beginning of the year. So interest rates have finally gone negative year to date, down 0.3% year to date. It's mainly because of a huge interest rate drop that happened a couple of days ago, where we've seen secondary trading rates actually coming down, pushed down also mainly due to a positive bond auction that happened in the previous week. So the previous week's positive bond auction therefore reflected in last week's bond trade, which then pushed interest rates. And now we're seeing negative. We've seen interest rates now in the negative for the year, actually showing that there's a bit of a bond rally starting to happen. And also, some of this news also as a result of the fact that we're also seeing talks starting to commence for the bond or the bond negotiations between the euro bond holders. So that's been one of the main talking points that's also driving this. Hopes that they can get to a positive resolution as quickly as possible. So you can obviously see some buying up of assets starting to happen now. Other news that we saw is commodity markets. Yesterday, we saw a little bit of a rebound in copper. Copper up 0.76%, back up. And we've also seen about Therefore, we've seen about 10.34% on the year, but down 3.17% year to date. Copper is still in the negative territory, and this is what's still going to put pressure on the government budget and also on the FX rate. We also did see that crude oil, which was starting to come down, has now rebounded strongly back up to 88.1 on news of the Hamas Gaza attacks that have been happening. Obviously, that's a very strong oil region. That's the Middle East. So whenever any conflicts happen in the Middle East, you do expect oil prices to start spiking. And currently, the world is dealing with conflicts in Russia and conflicts in the Middle East now. And that's putting a lot of pressure on global oil supply. What we've also did see now is that gold also jumped up yesterday by 1.59%. And always remember that whenever there's some sort of conflict around the world, global meltdown, potential disaster, gold tends to do very well. That's something that you do want to pay attention to. Gold really is, it's what we call the disaster hedge. So it's connected to outright disasters happening in the world. So whenever we do see conflicts of the nature that we're seeing now, people flock to gold and hold gold. So gold is now up 2.65% year to date in dollars. Now, obviously, our expectation of the pump price has come down mainly due to how much the oil price has moved down from 95, but it has hockey sticked back up to 85. So you did see global Brent prices are down 5.5% from where they were last month. So that's currently why we're seeing that early predictions of the oil price are signaling that we may have a pump price reduction of about 2.37%, pushing pump prices down this month to 29.27. These are early predictions. We're still looking at what's going to happen with the Hamas and Gaza attack to see how that'll do in terms of oil prices, while simultaneously we might start to look also at how our currency is going to hold up, because our currency is still on a continuous selling spree. This has been a horrible, horrible season for the Kwacha in terms of its continuous selling spree. Other news that we're also seeing now in terms of wealth insurance assets, cryptocurrency, Bitcoin was down 0.9% yesterday in dollars. In Kwacha, still up 97.33% year to date, while Ethereum was down 3.9% yesterday, only up 55.98%, while gold in dollars is up 21.8%, up 1.89% yesterday. So when you take a look at the cross asset mix, you do see that bonds are up 24.8% year to date, stocks up 28.3% year to date, US dollars up 18.7% year to date, gold up 21.8% year to date, while Bitcoin is up 97.3% year to date, and Ethereum up 56% year to date. However, remember, these US dollar, gold, Bitcoin, and Ethereum are very dangerous to hold your whole portfolio in because they are highly volatile assets. So if you take a look at now what we're looking at quarter to date, we do see that bonds are up 2.9%, stocks only up 1%, USD is up 2.1%, gold up 2.6%, Bitcoin up 4.7%, and Ethereum down 3.5%. And remember that these are strangling the losses from previous quarter, but you do see that there is a little bit of a compounding gain on the US dollar and on stocks so far. So we'll see how this quarter continues to turn out. Now, that has been our market roundup in terms of where we see a lot of the market as of today. Now, let's take a look very carefully, Stephanie, at our conversation from yesterday, where we were actually talking about sowing more than reaping. And if anyone remembered yesterday, we talked about the fact that you reap what you sow, you reap more than you sow, you reap consistently what you sow consistently, and you reap after you sow. So today I wanted to talk a little bit about that in terms of finance, because the reap what you sow is a very theoretical conversation. It's a very anecdotal conversation. It's a very it drifts away from practicality when we don't bring it down to the realities. So what are the sown seeds of wealth? Stephanie, I don't know if you're there with us, but take a guess. What do you think we mean when we say you reap what you sow? What do you sow when you want to reap wealth? That's a question that I would put out to everybody out there in the comments section. What do you sow if you want to reap wealth? Stephanie, I don't know if you're with us. Okay. Well, I guess we'll just continue onwards there, but we will put that question out to everybody there who's joining us. What do you sow if you want to reap wealth. And that's what we're going to be talking about today. I'd love to see some of your comments and what sticks out to you in terms of the conversation today. If you remember our wealth pyramid, in terms of that, if you remember our wealth pyramid, when you actually grip this, and I think we do have a question, though I'd like to actually bring that back up before we actually get into it. This is from Mr. Jebby Spear, who said, "Good morning, great to join live. I appreciate your time. Start of the year, you mentioned this year that bonds would have done what bonds would have done this year in performance compared to when we had a stronger start of this year. You mentioned that this year as a year of bonds, and how have we done over the year in compared to when we had a stronger kwacha. So bonds have actually still done quite strong, and I'll take you back, sir, to this chart that we have here in terms of our year-to-date performance of bonds here, and this is the one that we've captured. So in terms of it, if you look at our bond performance, bonds are up 24.8%. In terms of their return on investment on the secondary market. But we also do look at the primary market, where we've seen interest rates manage to hold. But bonds are currently sitting at somewhere around 24.8% on the composite point. In terms of your short-term indices, bonds are sitting around the spectrum of 22 to 24%. They both did come down by 0.5% in the last auction. So one, bond auctions have really picked up if you took a look at the last time when we talked about that. And two, we've actually seen that the appetite is starting to come back from the outside market slowly from bonds. Now, the problem is there's a huge backlog of dollar demand in this country. And when you have elevated oil prices, you have a lot more dollar demand that's actually in the economy, because you need an actual amount of dollars. So remember, the price of oil in dollars also affects the quantum of dollars that we have to pull out of the economy to buy oil. So that also puts a lot of pressure on the FX rate. So when you have this combined effect of, yes, money coming in from GRZ bond auctions, while simultaneously higher prices of oil, that's creating this offset. And then at the same time, you have weaker copper prices. So it's not like, unfortunately, the stronger dollar is still not playing out the fact that we're actually able to get it, mainly because weak copper, strong oil, and then you've got kind of bonds to try and kind of patch the difference. So until we get some sort of stabilization where possibly copper starts performing better and oil finally starts to cool down, we will actually continue having a lot of pressure on our FX rate. That's really where I think the biggest risk is coming from. Now, the good thing is it's still not resulting in higher interest rates. We are starting to see interest rates pulling back down a little bit. So that's evident that you've got stronger institutional players and outside players who are finally starting to yank downwards on the interest rate. And that's one of the good things that we're seeing in terms of interest rates going negative for the year, in terms of interest rate growth going negative for the year. So we do see that bonds are performing pretty strong. The fact that they're keeping up toe-to-toe with stocks, and they're the second best performing asset class out of the mainstream asset classes when you count out cryptocurrency due to the volatility. But out of the mainstream of stocks, bonds, USD, gold, you do see that bonds are outperforming USD and gold, meaning that there is quite an appetite that's starting to pick up for the bond market. Hopefully that answers that question. Now, let's get into the conversation where I was talking about the seeds. Hopefully, so that answers your question. Give us a comment if it does. Now, let's get into what I was talking about when I was talking about planting your wealth goals at the beginning of the year. And this is something that I've shown to many people. This is what we call the comprehensive wealth pyramid. Okay, and this is a simple model. It's a simplified model that was created by our team to make sure that when we try and create the guideline that someone needs to look at, they need to look at what they need to be, which is the bottom here. What do you need to be? Your actions, your character, your belief, that leads to what do you need to do, and then what do you need to achieve, and then what do you need to feel, and now where do you want to go? And these are the kind of the 5 steps. So you need to be something, to do something, to achieve something, to feel something, to go somewhere. And that's the comprehensive picture that puts your wealth journey and your trading and all your assets into and all your asset aspirations into a bigger picture. So let me give you let's start with, because yesterday we were talking about what seeds do you need to sow. So the seeds you kind of need to sow, and I'm going to reverse engineer this backwards. Remember, I've always talked about this and said your fulfillment of your life are these top points: your legend, your legacy, your lineage. Okay, your legend is the story that's told about you. What kind of life did you live? Your legacy are the physical things you left behind that will symbolize the things that you what's it? They're the physical things you left behind that others will build on or benefit from, that will also connect to the story of the life you lived. Okay, so that's what your legacy is. And your lineage are the people who will benefit from it, and they will continue your story. So all of this links, you will be remembered according to the story that you are able to tell. So if you look very carefully, sorry, let's just try and silence that for a moment. If you look very carefully, your lineage, your legend, your legacy, and your lineage are what you look back on and say, I have lived a good life. Also, trying to avoid Bonnie Ware's 5 deathbed regrets. So the future you want is a legend, legacy, and lineage. The future you don't want is a future of regret. Okay, so those are 2 things you're trying to avoid. But in order to do that, you want to have your 4 freedoms. You want to be free from worrying about your needs. You want to be free from worrying about the safety and security of your loved ones. You want to be free from worrying about disaster and chaos hitting you. And you want to be free from worrying so that your time can be free to use. Okay, so you want to be free from having to work to avoid worrying. You want to work for the purpose that you'd like to have. You don't want to work just because if you don't work, you have to worry. That's actual financial freedom. So that's a feeling. You want the feeling of freedom to forego the feeling of worry. Okay? And that's the feeling you want. Now the goals you have to reach in order to get that are your harvest, which is the cash flow you need to build in order to be able to do that. You need to build a specific amount of cash flow, or at least a set of assets that can generate a cash flow so that they can offset your food needs, your transport needs, your housing needs, the needs of recurring income. So you need a harvest. You need a recurring and perpetuating harvest to manage that. You need your health financed, because in your older years, your healthcare is more fragile, healthcare is more expensive. So you want to pre-fund your healthcare either through a set of assets or through a pre-funded insurance plan. The other thing you want to do is you want to make sure a higher education is set, because educated children can be financially independent and they can go and build on what you have left behind, but at least be free from needing you so much economically. You also want home ownership so that you can move your housing needs from a fixed expense to a discretionary expense, so that you are not under tension should you be behind on any costs. And also you want huge purchases met, because you don't want to have to go into debt for the things that you desire the most in the future, and also to protect yourself from disaster. And in order to reach these goals, we now have to look at the things you have to do. You have to manage your assets, manage your taxes, manage your estate, manage your money, manage your risk, and manage your debt. So these are things you need to manage actively to be able to reach those goals, to be able to feel that freedom, to be able to pursue those aspirations and avoid those regrets. So you kind of have to look at it from that holistic stage so that you know when enough is enough. And if you look at it now, we also look at the kind of character you need to have. Now, that's just a foundation. But what I wanted to go through here was I wanted to look at the seeds in terms of the activities that somebody needs to do. And no matter whatever happens to me, if there's anything I ever want to leave the listeners and followers of Money FM with, it's this chart. Okay? It's this graph. This is what you need to remember: what money means to you, what it symbolizes, and how it's used. I know everyone always says money is a tool. This is what we mean by it's a tool. It's a tool that gets you from where you are to your legend, your legacy, and your lineage. Money, if used correctly, if managed correctly to achieve goals, to unlock freedom, can get you to your legend, your legacy, and your lineage, so you can look back on your life with happiness and joy. It's really what we're all aiming for. That's really what we're all targeting. So what are the seeds? Remember I said we talked about sowing seeds. So what are the seeds, the things you need to do every single day consistently, the things you need to plant into your financial life consistently, these are the behaviors. As Dave Ramsey said, if you do rich people things with money, you will be rich people. If you do poor people things with money, you will be poor people. So if you look at the national study of millionaires that they did from the Ramsey Solutions, what did they find? Live within your means. So literally write a budget, stick with it. Make sure that how much money comes in and how much money goes out, there's always money left over. That's literally it. Okay, you take your income. When we say money coming in, we don't mean borrowing, we mean actual earning. Money earned versus money spent, and there should be something left over. That is what simply it means. And avoid credit. 95% of millionaires avoid credit. 80% of them invest regularly and specifically to a goal like retirement. They make regular contributions to mutual funds and diversified portfolios. They do it over a 28-year period. So if you're going in there thinking that you're going to become ultra wealthy in 5 years, 2 years, 3 years, unless you're building some phenomenal business that changes the landscape of the country, you're highly unlikely to do that. Okay, there's no single bullet investment ideology that's going to knock you out unless you do hyper aggressive saving for about 10 years, where you are prepared to save at least 50 to 65% of your income. If you are not willing to do that, to save 50 to 65% of your income, then unfortunately you're really playing a tough game here. 79% of them start with zero. So if you're going to make excuses about the fact that, no, I didn't start with this, I don't have this, I don't have that, well, then unfortunately you're pretty much going to shoot yourself in the foot. They don't wait for themselves to become executives, because 85% of them are not chief executives, chief investment chief, this chief that. They're not senior officers of big corporations. 69% of them are not in the top 10% of earners, and 62% of them went to regular public colleges. These are regular people who work regular jobs, who are just consistent with their money decisions. So they don't borrow, they invest regularly, and they take their time. These are the seeds of wealth that they have exhibited. They're prudent with their spending. So that's one seed of wealth. They plant their money into assets, a diversified portfolios of assets. And two, they are patient. These are the three seeds that they put in. Three, if you look at the study of millionaires from Fidelity, who has the biggest pool of millionaires in the world in terms of their client book, Fidelity sees their assets have their clients have a long-term focus, 20 to 40 year savings. They do about 30-year saving and investment plans. So their goals are 20 to 40 years. They save for about 30 years. They invest in professional development, meaning they're always looking at increasing their revenue generation capacity. They're revenue aggressive, especially because a lot of them take performance-based revenue. So they will take bonuses, they'll take commissions, they'll take percentages. They earn a lot in percentages. That's what Fidelity started to find. They're self-starters. 86% of them inherit nothing. They're aggressive investors, and they have financial advisors, and they diversify quite well. While Dr. Sarah Stanley Fallow saw that a lot of them are also altruistic in that they're family focused. They're married and they tend to be family focused. 50% of them graduated from public colleges. They are first generation millionaires. They work more hours than the average person. According to US data, is 38 hours is the average weekly working hours of an American, while the millionaire works 45 hours, meaning that the average millionaire works 20% more hours than the average person. So while every person works 5 hours, millionaires tend to work 6. So for every 5 hours someone works, they work an extra 1. 70% of them stick to a strict budget. They drive regular cars. They don't always look for the latest thing. They're somewhere lower than that. 70% of them are confident investors, and they work in fields they study. They don't waste money getting degrees in areas and then not studying and building proficiency in them. Professor Cal Newport talks about things like building your career capital. So this is kind of what we wanted to have a conversation about in terms of the seeds of wealth, because everyone talks about what they want. Very people talk about what they do. I'm going to leave you with one word that, that Jay-Z said in his Grammy Family song. He said, everybody wants to be, he said, it's not great being Bobby Brown, but to be Bobby, then you've got to be Bobby now. And what he is trying to symbolize is that life is a process. Okay. If you want to be what someone is today, you've got to be who they were 5, 10, 20 years ago and start building that journey all the way out. Too many people do not want to be where people were 20 years ago, or you want to say, look, in 5 years' time, I will be where you are. Well, the question is, are you doing what a person was doing 5 years ago? Are you where someone was 5 years ago for you to say you're going to be where they are today? Or do you think you're going to skip processes and magically arrive where they are? So you have to find people's starting points. And a lot of what we've shown you today are the seeds and the origin points of most of the journey. So to all of you who've been with us today, I know it's been a bit of a change of scenery and obviously a bit of change of sound. We are thankful for joining us. Jebbies, thank you for your question. And if you have any more questions, always feel free to drop us a question here and there, and we will get into the conversation with you. To Stephanie, I don't know if we'll have you. I know that we lost you a bit there. Have a wonderful day. See you tomorrow as we continue our conversation on risk.